Hey guys, welcome to our next trading video. I have my cup of coffee here. Now, let's jump away with the indicators. Now, I did notice on the previous video, a lot of you guys were asking for clarification on the indicators that I'm using and how the trading strategy works. So that is exactly what I'm going to show you guys tonight is the indicators, what their settings are, what they are called on TradingView, and then I'm going to show you how I apply the strategy and how I essentially made the income or the 19% growth on my account, as I said in my previous video. Let me just take off. This is my own here. Right. So the first indicator that you are going to look for is you are going to look for the moving averages. Let me just have, where's the big one? The five. I don't think it's the three line. No, it's not the three line strike. Why can I not find my indicator here? Multiple EMA. Okay, so you're going to look for the multiple EMA by Salim Salva, this one. Okay, now on the multiple EMA, you're going to open up the settings and the first length, you're going to make 20, but you're going to make it on its high. And the next one, you're also going to be making 20, but you're going to make it on the low. Okay. Then you're going to go to, that's the only two you change. The rest you can leave. Then you go to the style and you're going to switch off the 50, the 100, and the 200. But remember now, don't worry about the 10. We already changed the length to 20, right? What you can do as well is you can maybe increase the visibility. Let me just change that. Make it, I like a darker green personally. But yeah, so there is the two, and then you're going to click OK. So that is the first indicator that you are going to need. You are going to need the 5 EMA bias. You don't have to specifically use this one. The only reason why I do it is because I use multiple EMAs and because some of you are using the free version of TradingView, which I'm also using. I'm not paying at the moment, but you can then just use this one and have multiple EMAs. For example, you can also bring in the EMA. I don't specifically use it all the time, but I do sometimes bring in the 200 just to give me an idea of where a possible profit target can be or where the price can bounce from, but it's not applicable to this strategy specifically. Okay, so this is what you're going to do. That's the only changes you're going to do to the Selmac. Now, the next one I use is the Volumatic Vidya Big Beluga. So if you go here and you type in Volumatic, there it is, Volumatic Variable Index Average by Big Beluga. Right, now let's quickly have a look at the settings. So on the input style, you're going to make sure your video length is 10, your video momentum is 20, the distance factor from the upper and the low bands is 2, the source is on the close, and the rest you're going to leave. Style, you're going to have the plot on, trend up, trend down, and all these labels. And visibility, you're going to leave as that. So that's pretty much that, just the standard. So we're going to switch off this one for now, and I'm just going to run through the trading strategy itself. Okay, so how does the trading strategy work and where do we take trades and how does it? So I trade on the 4 hour chart. You can trade it on the 1 hour. I will demonstrate on the 1 hour how it works. Obviously, something you need to learn as a trader. The more or the lower time frame that you take as a trader. So if you're going from the 1 day to the 4 hour to the 1 hour, the lower you are going on your time frame, the more trades you are going to get, but the more false signals you will get. Now, one thing that people don't teach when it comes to using indicators is when you are using an indicator, the lower the time frame, more trades, but more false signals. So you're going to have a lot more trades, but a lot of your trades are not going to play out as they would play out on the 4 hour chart. So this strategy can be used on any time frame. It's entirely up to you. You can choose whichever strategy you want, but this one specifically works on the 4 hour. I use it on the 4 hour because I'm lazy. I don't want to sit behind my charts. I had that time in my trading career where I had that time in my career of trading where I was on the 5-minute chart, the 15-minute chart, the 30-minute chart. And I'll be honest with you, for me, I have a lot better results than I had, being in the market every single day. If you want to become a full-time trader and you want to make money, then yeah, maybe going on the lower time frame is a better option for you. But for me, 4 hour, worst case scenario, 1 hour, I can sometimes even go all the way up to a day chart. And again, if you look at the growth on my account, I made 19%. Now, if this is all that I make this year, only 19% growth on one of my accounts, that's more than what some institutions do over 3 years. So I'm okay with the results that I'm getting. Because I decided a while ago that instead of leaving all my money to institutions to trade, I'm going to learn how to trade and I'm going to try and grow my money myself. So, although I'm going to have my standard retirement policies and stuff, I'm also going to take money and I'm going to trade with it and see if I can get better results in the long run. Right. So, this is why I love trading. So let's have a look at how does this strategy play out. Now, for you guys that have not been following, let me just go to the 4 hour because I'm on the 4 hour. I will break it down on the 2 hour just now as well. Okay, so this morning we had a sell trade that I initiated. So how does a sell trade work? The entry parameters are the moment that you have a candle that closes. So let me write that out for you guys. So if you have a candle, let's put this aside. So if you have a candle that closes below the 20 EMA, then you take a sell trade. Now, I know the terminology is sell, technically it's a short, but I'm just using this because I trade a lot of beginner traders and it's easier for them to understand buy and sell than short on long. But in actual fact, it is a short trade. So for the guys that are a lot more sophisticated, let me rather just also use the right terminology. So you're going to take a short trade, right? But now, what are the parameters? So you will then I engage the sell trade or the short right there. And then what I do for my stop loss is I target the previous swing high. Right. I'm going to show you now on a buy trade, so bear with me. This is just for a short or a sell. And then I'm going to target 1 to 1.5. So I'm going to go down and I'm going to target 1 to 1.5. Another thing that I will check at this moment is I will go into my EMA and switch on my 200. And the reason for that is I just kind of like want to get an idea where the 200 lies. If my TP is very far from my 200, then I might consider, just observing price at that level. Doesn't mean I'm going to close the trade. I just observe price. Okay. Oh, why am I closing that? So this is just something that I like to do for myself. But this is how you would set up a short trade. So this is the current trade that I'm running. If you want to see how the trade plays out, I have my own Facebook group. In order for you to get into my Facebook group, you have to click on the link below, go onto my website, register yourself there, and then I will allow you into the Facebook group. I'm very strict on the rules in my Facebook group. I'm trying to keep scammers and spammers and all of that out of my groups, and that is the requirement. So if you don't want to do that, then don't join my group. Okay, so this is the parameters for the trade. Then I will take a 1 to 1.5 risk. Now, this is the parameters for a short or a sell trade. Now, let's look at the buy trade or the long trade that I took. So here I had price coming out. It broke out there. Now, this is entirely up to you. You could have taken the trade there or there, but you would see, let me just delete that out. You would see if you do go in a little bit more, you would see that this one nearly closed above it. So you could have waited for the next candle if you wanted. I'm just there. I took the trade right there. It showed to me. And you can take it anywhere on this candle. So don't be strict on yourself to say, oh, well, I have to take it. No, just take it on the next candle. Anywhere on the next candle, just make sure to take the trade. Right. So what did I do? I then targeted this swing low here. And then I went for a 1.5. Now, One of the things that I do, but this is for the more advanced guys. So if once you get into my community and you learn the strategy and you can apply it without emotion, then we go for something what we call a trailing stop loss. A trailing take profit. So that means that we will then observe price. And I think on this trade, I didn't take a 1 to 1.5. I rode it all the way, I think, to here. And then I got out of the trade here. But I'm going to show you the indicator that I use to observe the trend. So I'm going to show you that indicator. But yeah, if you're a beginner trader and you're just starting out, 1 to 1.5, guys, 1 to 1.5. You a lot of the guys when they start with trading, they think, yeah, I need to make a lot of profit, and I need to adjust and trailing stop losses whoa. Why don't you learn to walk or crawl before you want to run? First thing you got to do is learn how to take a trade and leave a trade to, to do what it's supposed to do. Learn to become unbiased. I took this trade. Do I know if it's going to win? I don't know. I don't know if the market is going up, down, sideways, left, right, whatever. I don't know, because guess what? Forex is highly manipulated. It is a manipulated market. There are big players putting a lot of money in here. I'm one of the smallest little fishes swimming around here. But what I am doing is they can't take all my money away from me because I'm consistent, because I apply my strategy without emotional intervention. All right, so that is the parameters for a long trade or a buy trade. Now let's have a look at the sell trade that I took here. So here the price broke out. I took the trade there. This was the stop loss, and then I went for a 1.5, which I just got here. This was a stunning trade. I think it like TP'd in 2 days. It was beautiful. Remember, guys, I am on the 4 hour, so if you're going to go down on the time frame, you're going to get different trade signals. Okay. And then obviously here is, so that is another sell that I or short that I got a good price on. Here I had another one here. I think I took the trade somewhere on this candle. So what I'm doing is I'm targeting that swing low. That's the swing low that I want to do, and then I target the 1 to 1.5. All right, but I want to show you guys what I do when I lose a trade. So you guys can see it. This was a stunning month. Profit. We'll see if this one plays out on profit. All right, so now this is where the strategy gets really choppy, right? So this is where the strategy gets really choppy, right? Because now, if you think about it, let me play this out. I want to start here. So you now took a long trade here, right? So somewhere here you took a long, you targeted that swing low right there. You had the 1.5, right? You were very happy. The trade played out in your favor. You were very happy. Then you had this signal here that was a sell trade or a short. So you took the short trade, targeted, there's the previous swing high, and you targeted the 1.5, and it did not play out. This trade didn't play out for me. I know, because I took it. All right, but here is how my risk management works. So as you guys can see, I kept this trade. Price came back up, bounced out again. I don't piggyback trade, so I will never take a trade on a trade on a trade. If a signal presents, I will take one trade, let it ride out, and then afterwards, if I get a similar signal in the same direction, then I will take it. So price came back out, price came in, it didn't cross the top right here. That's where I took the trade, right? So what I would then do is I would then shut down this trade. I will close it in a loss, and I'll open up the next trade. Okay, you can see it there. So right there, I closed this short and I opened up a long. Why? Because now I didn't lose all of the loss. I didn't suffer the maximum loss here. I suffered, let's say, 3/4. So if there was 1/3, if there was 3 parts to it, I lost 2/3. I saved myself 1/3 of the loss on the trade. So that means when I do have a strike like this, I make this up quite easily. Right, now let's go back to some more choppiness. So I want to explain it again. So here is another short. So I took the short right here. I targeted the previous swing high, and I targeted a 1 to 1.5. Nicely played out, TP'd right there. And then obviously the next time it gave me a long here. Let me just engage a long here. So I took the trade here. Great stuff. I targeted that previous swing low, and I then went to a 1.5. But now, this is how the strategy works. As you guys can see, price came out, came back down, and then price did another breakthrough here, but then price broke down there. So that means that right at that point, I had closed this trade in a loss. Okay, so I closed this trade in a loss. Not a big loss, a very small loss, but what happened? No. I'm talking. I'm sorry, guys. I apologize. No, I didn't close it here because we are on a buy trade. Yes, we are on a long. Okay, so I closed the trade there, and then I took a sell trade. Because here's the thing that a lot of people don't understand is you're a trader. The idea is for you to trade. So I took a short trade right here, targeted the previous swing, but 3 candles later, I got knocked out. So I had the small little loss, and then I had another 2/3 loss. Then I had a TP. Then I had another loss, and I had a TP and a TP and a TP, right? But now, this is what I do. Now, you don't have to do this. This strategy is run about 44% accurate. So that means out of all the trades, you're going to have about 65% of the trades going against you, and you're going to have about, I would say, 45% of the trades that are in your favor. That's why we target a 1 to 1.5 risk to reward. So even if you just trade it, you're going to make some money. But here is where I make a lot of money. And I mean, I make a lot of money because what I did is I took this trade and I took it normal parameters, right? Now, on this trade, so I use on my account, I use a 0.03 lot size, right? Lot size. Now, on this next trade that I took, this specific one, I then made a small loss here. So this trade won for me, this trade. So on a 0.03 lot size, I always calculate it, no matter where my TP or whatever it is. So I will then calculate, according to a lot size calculator, that I never lose more than $9 per trade. So I lose about $3. So, or let's rather work it on a 0.01. So 0.01 and lot size, and that means that I will lose no more than $3 on this trade. So that comes down to lot size. If you want to learn lot size, then I suggest you buy my book and my course and get the basics and fundamentals under your knowledge gap, and then take it from there to understand how you calculate out a trade, because not every single trade is going to have the same lot size, and you need to factor that in. So now I've taken this trade, which is 0.01 and $3, right? I had a loss here, which means I didn't lose $3 because that was the full trade size, but I may have lost, let's say 0.5. I've lost 50 cents. I think it's going to be a lot less. Let's say 10 cents. I lost 10 cents, right? That's what I lost on this trade, for argument's sake. Now, what I would do with this next trade of mine, instead of using 0.01, I will then double up. Now, this is what we call the martingale. This is a lot of gamblers, a lot of people out there understand the martingale. You double up on your losses to make back what you lost, and also continue to make a profit in the next one. So that means in my next one, instead of risking $3, I risk $6. Now, this is just hypothetical, because if you lost $3, if this trade was $3, this one you're going to go and you're going to calculate out $6. And then your lot size will vary. I'm just using this as an example. So this is now $6. Now, on this trade, you can see that I did lose 2/3 of that. So I lost $4. Right. So I'm now $4.10 down. Now, on my third trade here, this one here, I had a TP. So now, what would I use? I will then double up on my lot size again, or I will double up on how much I need to lose. So that means I've now said, okay, on this trade, I'm going to lose $12 because I doubled up the amount of money. Remember the lot size, guys, you need to calculate it out with your calculator. Then you will understand. I'm just using this lot sizes as an example. So now the first one I risked 3, The second one I risked 6 because I lost here, I lost there. Now you say, yeah, but money, you didn't lose $3. I know, but it was a losing trade. Just because I didn't lose the full $3, I only lost 10 cents of it, it's still a loss. And I take it as if I lost my $3. Then the next one, I didn't lose $6. I lost only $4. But now this one played out for me. And because I am on a 1 to 1.5 risk reward, it means that if I risk $12, I am now anticipating that I am going to win back 12 plus half of that. So that means I will win 12 plus 6 means that that will be $18 because that's my TP, 1 to 1.5. My risk to reward is not 1 to 1. I don't risk 12 to make 12. I risk 12 to make 18. And I hit a positive there of $18. But here is my magical. Now, you can trade it like this and make an enormous amount of money if you understand the maths, right? So this one is, I must actually put a positive. So I had a positive, where's my positive now? A positive 18 here. So technically, just running these three trade simulation, I made 18 minus 4. So technically, I'm up 10. What? I'm $13.90 up on this trade. But the martingale in itself is a dangerous uh, system because you need to keep doubling up. And that means your lot size and everything is going to get bigger and your risk is going to increase dramatically. So, what I have done over time, I have learned to mitigate my risk. So, what I will then do is I will then go and look at the lot sizes that I used. I know that that lot size was a zero point 0.1, a zero point 0.2. So what I'm going to do then is I go and calculate all of my lot sizes that I used in my previous trades, the losing trades. So that is 0.01 and 0.2. Again, depending on how you shift it, but you need to join me so I can explain that to you. So based upon this, I lost lot size 0.1 here and 0.2 here. So in this trade, when when this trade plays out and it goes in my direction, somewhere along here I close the trade to recover the 6 and the $3, right? So then I close 0.3 of this trade. I close and I only let the 0.1 ride to TP. Why do I do that? Because I am bringing back liquidity into my account. So this is a way that you offset the martingale and reduce the risk to your account. For example, if I then, let's say this trade went all the way up to here and I didn't TP on this one. It just ran up and then it came back against me. I already took off the table this loss. This losses that I sustained here, I've already returned back to my wallet, which means I can continue with my martingale. I can continue trading because my losses are back in my bundle because I know that that eventually I will hit a trade that is successful. Now, is the strategy always successful? No. When you get into choppy stuff like here, yeah. There you had a loss. There you had maybe a TP. This could have been a loss. This could have been a loss. So you could have had 1, 2, 3 losses potentially here in a row and then had a TP. I have back tested this strategy, and out of 100 trades taken, the maximum amount of martingales that I had to take was 6 on top of each other. So it only maxed out at 6 martingales. So that is an entire decision to you. I martingale to the point that I blow the account because that's just mine. I know my risk and I know how to mitigate it. I take profit out of my account as I grow it. So there's a lot of strategies that you learn from me over time because blowing accounts is actually normal for traders. If someone says to you, I've never blown an account, then you should be really suspicious of what they're doing because I've blown many accounts. Sometimes the market went against me and I martingaled myself straight into my account being liquidated because I had a margin call because that's just the nature of trading. But before that, I had made enough profit for me to bring back my account, restart the trading thing, and I made double or triple back. But I keep taking out my losses. So, what makes this strategy so powerful is the fact that I recover my losses on the trades that do go in my direction and I do take. So, out of this, Before this trade is even take profit, I've already given myself back $6 and $3. Straight up, guys. I gave myself back $6 and $3. Why? Because they were my losses. Although I didn't actually lose this, and that's why my account grew 19%, because technically my losses were not $9, but they were actually $4, which means on this trade I pocketed over $5. I pocketed almost $4.90 on top of the next $3. So in the maths in my group, I will explain to you further, but this is pretty much how I trade this. So I just wanted to do some more explanation around this. I mainly trade gold. The system was tested on the Dow Jones, the 30, stunning, better results than gold. On the US Nasdaq 100, better results. I have tested it on Bitcoin, works just as well on Bitcoin. I will not suggest that if you're going to do Bitcoin to trade this strategy while using leverage, rather do spot trading. Spot trading works just as well. And I've been growing my Bitcoin like this for quite a while. Just simply following the strategy along, and just opening up a long. So I buy Bitcoin when it goes above the line, and I sell Bitcoin when it goes below the line. Pretty much that. It also works brilliantly on the US euro. Stunning, really do. You can definitely do it on the euro US dollar as well. Also works really well. I found it to be a really good. The results are actually, the percentage is higher on the euro USD than gold. As you guys know, gold is a very volatile market. But what you are looking for in this strategy is a volatile market. All of your top currency pairs, guys, all of this is covered in my book, in my training course. Yes, I am a trader. I've written a book. I've also taken that book and turned it into a trading course with over 38 videos where I take you through everything from the beginning. So if you've never placed a trade in your life, I'm going to show you how to start with that, work through everything, and I give you 3 strategies. Because beyond only doing this, I also write my own indicators, my own strategies. So if you have a look at it, I design my own strategies and I perfect them. So if you have a strategy that you've tried and you want to perfect it more, come into the community, share it with me. We can look at towards creating our own strategies and running them through, creating our own scripts and creating strategies here for ourselves. I'm not a very big advocate of a robot. Robots are good. I've tried them before. Not my personal touch. I like to be hands on. And since I'm on the 4 hour chart, I don't need a lot of oversight on my account. I mean, I'm running, 4 accounts. It's easy. I mean, all 4 accounts are running. One is on gold. One is on Euro USD, one is on Bitcoin. So I don't cross trade my account. So if if I've got one account, I only trade gold. Another trading account that only trades Euro USD, another account that just trades Bitcoin. I'm very specific on sticking to one specific currency with one account so that I know that all the trades that I'm placing is within that strategy. But this is pretty much how the strategy works. I hope you guys understand the indicators now, and you know how they work. But before we go, I want to quickly explain this indicator, because you guys have seen all the other indicators. You have not seen this one. So I forgot to run through this one. So what is this volumetric vidya for me? Now, what it does is it gives me the input of whoever's in control of the market at the moment. So what it does is, here I'm going to show you. So right now, the delta volume is 0. That means buyers and sellers are locked against each other. There's not going to be a lot of movement. This is telling me that we're going to have a lot of sideways movement until one of them step in. So this is a great indicator from a volume perspective to tell you what is happening. Now, if you have a look here, on this trade, when I took this trade here, the reason why I was able to ride it out all the way to here was because you will see that this line stayed green. It never flipped to red, which told me that this trade had more traction. And the moment that it prints these green dots for you, you now know that there is a level of support right? So I know that these are levels of support. Here is a liquidity zone, or a liquidity gap, as people like to call it. This is indicators great at showing me that here is a level of support for the price. So I now know, okay, cool. If it's creating these support levels, it means that, hey, the buyers are still in control of the market. So what it pretty much just means is that the green line shows me it means the buyers are in control. When I see a red line, it means that the sellers are in control. That's pretty much what it does. It just helps me to write out trades a lot longer. I know some of the guys that I've taught, they use it to give them a second confirmation. So instead of just taking the trade here, like I did, which I'm a lazy trader, but instead of just taking the sell here, like this sell, you see this sell? So I took, where was the short that I took? Oh, here it is. So instead of taking this short here, they would have necessarily not taken it because there was not a red line there. I took it and it worked out for me. Here is another one, a short. Now they wouldn't have taken this short because we were in a trade and it showed that there was a it's in the opposite direction. This is pretty much trading against the trend. So you can cut out this noise. This you are necessarily cut out, but this type of noise. So if you are in an existing trade, so let's say, for example, what that means is if you took this buy trade, right, where I took it there, these would have been canceled out because you would have seen that there is a green line here. And that means that you could have ridden this trade and not taken other trades in between and TP this one and not suffered the loss and the win. That's entirely up to you. I can't tell you how to trade it, but if you come into my community, I will explain a lot more strategies. And this specific strategy, I'm constantly writing new indicators for it. I'm writing new algorithms to understand this thing. I'm continuously working with AI to understand how to better this strategy. This thing is working. If you guys don't believe that it's working, go check out my live results. I have live results where you can literally go and check out what's happening on my account right now. I show you my open trades, I show you my close trade. I'm transparent with everybody. Okay, so that is pretty much the strategy. I hope that this has given you guys a little bit more insight on what I do and how it works. Put some more stuff in the comment section. If you want to understand more about this, click on the link. It is absolutely free, not going to charge anything for it, but you can go in there and you can go and come and join my Facebook group. I need to know who you are. I do like a KYC type of thing on my group in order for you to come in to protect everybody. So once I've KYC'd you and I know that you are not just a spammer, I've got your email, I've got your name, your surname, then I will allow you into the group. And then from the group there, if you want to learn more about what I do and trade with me, I have an amazing trading bundle where I have an ebook where I work through everything. This is an extensive book. I will show it in the next video. It has over 38 chapters. Every single thing I broke down into specific sections. So if you are battling in sticking to a trade, there's a section for it. Things that you can go and do to better yourself. And then there's also a video series on each one of these. And when you get the whole bundle series, you get the videos, you get to join me in my trading room. You can just follow along with the trades that I take. If you feel like you want to close a trade beforehand, you phone me so I can tell you not to do it. And it's a whole support structure that I've created. So I hope this sheds some more light for you guys on how the system works. And I really hope this added some benefit. If you do like these videos, please join my channel, subscribe. Also, pop in the comments if there's any questions that you have, or come and join me in my Facebook. I'm very active in my Facebook group. Crazy. I'm posting 3 to 4 times a day in there. I'm updating on my trades. I will tell you what trades I'm taking. I will be doing more analysis on my other pairs that I'm doing. So I would be excited for you guys to join me. I have been doing trading for 15 years, so I think it does validate and give me the thumbs up to actually voice my opinion when it comes to trading. But as always, guys, I'm not giving you financial advice. What I am doing is I'm just showing you what I'm doing and what is working for me, and maybe it can work for you. So, guys, if you enjoyed the video, please give it a thumbs up, and then I'll get you next week in the next video where I'll explain this strategy a little bit more, but ask the questions because then I'll answer them in the next video. Bye.